Yeah, but I think I will let you start the presentation and give you the words, and I will tune in again when we come to the question and answer.
Okay, great. Thank you. Yes, hello everyone. Nice to be here. I'm Jukka Kainulainen, Kempower CFO. And then first, briefly about Kempower, what we are and what we do. So we are rapidly growing European electric vehicle fast charging solution provider. And what is our target is it's to be the best partner for our customers in developing this emission-free business. We were founded or incorporated 2017, but actually our history comes even from the 1990s when we were a separate business unit in Kempi, the welding machine manufacturer. When look a little bit more in details about our company, when looking the charging power, how much we deliver around 80 megawatts charging power per day. And this is more or less the consumption of one Finnish house or 4 Finnish houses annually. So quite significant. When looking at production, we have our production sites in Lahti, Finland, and actually we had last week official opening of our new factory in Lahti, where we got the extra 10,000 square meter production space. So important day for the company last week. When looking amount of employees, end of H1, we had 260 employees working in 9 different countries. And on top of Finland, we have legal entities or subsidiaries in Germany, Netherlands, UK, Norway, France, Spain, and Italy. And these are more like the sales offices. We have there the sales managers, sales directors, pre-sales support, services people. But then, of course, like we have communicated, also the USA is in our planning. We are setting the operations there until 2023, and there will be also separate legal entity according to plan. About the shareholding and shareholder structure, we have around 29,000 shareholders at the moment, and we listed our company in Nasdaq First North Helsinki end of the last year. And the Kempi Group is our biggest owner, owning around 68% of our shares. Then about the charging and DC charging and how it differs from the AC charging. So one, of course, the difference is that when looking AC chargers, AC charger is converting the AC to DC to the converter inside the car, when in DC charger, the converter itself is inside the charger. And also when looking the DC charging, where we focus mainly, that is technologically more advanced. Barrier to entry in that market is higher. There is less competition. Pricing levels are higher, and also at the same time the margin levels are higher. So those are the main reasons we focus on the DC charging. And then maybe the biggest reason is actually the speed. So when you look the table there on the bottom, the left-hand side, you see the charging times for AC charger with 11 kilowatt capacity. And you can see that it takes 8 to 9 hours depending on the car. When then on the right-hand side, you see the DC chargers and different car models, and it takes around 30 to 40 minutes to charge a car up to 80%. So this really make the big difference. And at the same time, we don't see these as to be the competitors to each other. We see those really be the complementary. So both has its places in the market. So it's natural that some people might have in own house this AC charger to get the car charged during the night. But then if you take, let's say, business trip from Copenhagen to Hamburg by your EV, you would like to get the battery really charged quickly, and then you need the DC. So like I said, both has these own places and own needs in the current market. Let's then look a little bit the market data, how the European car base is evolving over the years. Also in following slides, I'm going to how our target markets are developing in the coming years. But starting from European car base, at the moment, roughly 2% of European car base is fully electric. When looking at the latest data from this year, around 10% of the new car registrations in European Union is battery electric vehicles. And interestingly, it has just bypassed the plug-in hybrids recently. but still the amount is quite small when looking whole European car base. But when looking into next 15, 20 years until 2040, the car base will increase from 2% to more than 40% to be fully electric. So massive growth is expected. And when looking actually this 2040 number, interestingly, you can also draw the conclusion that there's quite a lot of room for electrification even after 2040. So this quite interestingly shows the industry that it's not only 1 or 2 years how this development happened, but we really talk about decades here. Then next, let's look about our target markets. This left-hand side, the Europe, and right-hand side, the USA. And these two together create this target market of 4 billion euros, where the Kempower is at the moment focusing. When looking at Europe on the left-hand side, it's at the moment bigger market. Electrification is longer than in USA, and it's expected to grow from half a billion 2020 to 2.5 billion euros in 2030. In USA, as a smaller market, will grow to 1.4 billion euros until 2030. And there is also included these 3 different segments: the private vehicle, like passenger cars, commercial vehicle, like buses and trucks, and off-highway, let's take tractors as an example. See, all these segments will grow significantly during the years. And what's also important to remember that Kempower is strong in all these segments. Then another interesting point, there is in USA, the Joe Biden's infrastructure program, which will allocate to EV charging infrastructure $5 billion in next 5 years. So it's really interesting to see how this growth possibly will even speed up from here. Then about our product portfolio. There's actually 3 words we could describe our product portfolio. It's a modular, it's a scalable, and it includes this dynamic charging, like we call it. And what does it mean that it's modular? So basically, our whole product portfolio is based on the same components. So same electronics, same power module, same screen, same cables are included in all our products. So that really makes it modular. And then the scalability, that is best seen on the left-hand side when you see this satellite charging system. So it's quite typical that when some markets are in early stage, they buy the satellite system from us. They, let's say, include in the cabinet few power modules, let's say 100 kilowatts and 1 satellite when they want to start the business. But when their business grow, they can, according to customer demand, at the power module, at the satellite, so scale up the system or inside the system according to their customer demand. And that is the big difference in our products, because in our competitor situation, they can just sell the new separate chargers when we can sell inside this charging system more capacity. Then other products, the C-Station in the middle, this is kind of the market standard. It's quite typical product in the market at the moment. That's why we also have to have it in our product portfolio. And then on the right-hand side is this T-Series, which is kind of the movable charger. And this is, for example, known, quite many remember from end of last year, this COP26, the world's biggest climate event, where our T-Series was used in charging world leaders' vehicles. They were commuting inside the event. And also, of course, this charge really, really important for our maintenance, remote maintenance software, but also on top of that, it's also works as a depot master for bus operators. They can preheat and they can pre-charge the buses before the shift takes place. Then a little bit more about our difference of our system comparing this prevailing market standard. There is on the right-hand side, kind of our competitors' chargers, 3 chargers, capacity of 450 kilowatts, comparing our system with 400 kilowatts. And there is 6 cars in both cases requesting the same amount of power. in the right-hand side, 3 out of 6 doesn't get the power they require. And the outcome that with the 450 kilowatt capacity, only 350 kilowatt can be delivered to cars, leaving 135 kilowatt idle power to the charging operator. When in our situation, same cars, same amount of power they require, 5 out of 6 are charged as they require. And the outcome is that with the smaller capacity, more power is delivered, 390 kilowatt, comparing the competitor situation, 350 kilowatts, and there is less idle power left, which means this is a better business case for our customer, and there is less queues for the EV drivers also at the end. Little bit our customer groups. We have 4 different customer groups. Left-hand side, the CPOs, charge point operators and retail chains. I could say that's the most important one, but of course don't want to underestimate the others, which are really important as well. Also including the bus and truck operators, OEMs, which means that our chargers are sold together with the customer solutions to end customer, and then of course the distributor and installer networks. So really well-known names actually in all of these categories. Highlighting one of those, S Group, one of the biggest retailers in Finland, or PowerDot, which is the Portugal-based charging point operator operating in Portugal, Spain, France, and Poland as well. Of course, the Koiviston Auto, biggest bus operator in Finland, or Epiroc, leading mining and infrastructure manufacturer globally. So really well-known names, like I said, in all of these categories at the moment. Then, of course, relate also in this event. So how Kempower contribute to this energy transition? One really important KPIs is, of course, the one on the right-hand side. In Kempower solutions, mobility emissions can be cut by 86% according to Finnish Traficom. So this is a significant impact on our charging solutions. Then some important highlight as well. We received last week green equity designation from Nasdaq, which means that our reviewer saw that our 2021 revenue 100% and capex 100% was dark green. So Nasdaq really recognized Kempower as a green investment. So this is really important for us. And then also some highlights from H1, our employee satisfaction, what we measure based on the eNPS, Net Promoter Score was 80, which is really high number. And this is something we, of course, focus a lot as a growth company. Also, some other important targets we have on the left-hand side. We target to 100% carbon neutrality by 2035, including 100% fossil-free use, and also other targets regarding our sustainable product portfolio. We have this 99% recyclability rate target, which we actually already now fulfill with our T-series charger. And then, like I said, this employee satisfaction target, number 1, workplace for future professional. So we really want to secure the high work satisfaction. We really want to make sure that there's no accident in the workplace, and we want to also train for the first aid. But as a conclusion, the most important KPI is still this mobility emission 86% cut. So let's take, if we would be oil company, we quite likely could deliver a part of those on the left-hand side, but we never could deliver this 86%. And more we grow, more we deliver this mobility emissions cut also to industry. Then a little bit about the financial review. Our H1 was actually first financial review with the IFRS. So we did the transition to IFRS. And the main reasons for that is that we, of course, want to have comparable numbers to other companies in the industry and even globally. And also, of course, we want to increase the interest of Kempower as an investment. And the biggest actually impacts of this IFRS transition, the first one is this IFRS 16, where we capitalize the lease contract on our balance sheet. So it's increasing our balance sheet at the same time. And then also development expenses, which were partly also capitalize from the history. And then which impact on the comparable numbers is this IPO costs from last year, when those are treated different way, not anymore in the financing expenses like in the Finnish accounting standards, but now those are split between the equity and operating expenses. Our key figures from H1 this year and Q2 as well. So we really had record high order backlog and order intake. Like you see, we have 62.4 million order backlog end of the H1. Really, really good result. Also, our order intake in H1 almost 82 million. So it was really strong performance from our sales. When also looking revenue growth, in Q2 we grew 225%, and in H1 268%. So it's of course the really high growth. Also, our gross margin was kept on healthy level, like you see. But I think most importantly, even though we have been investing quite a lot on our capacity expansion, on our headcount growth, in order to deliver the growth, we still made positive operative EBIT in Q2 and H1, and our result for the period in Q2 was positive as well, like you see. And like I said, this IFRS impact that is increasing our balance sheet by 15.4 million euros, and at the same time also increasing our net debt. Then let's a little bit look then also of revenue trend. So like I said, we are still quite young company, and when looking 2018, our revenue was rounding to zero, 20,000 euro, and now we grew the revenue to 33.2 million euros in first 6 months. So we exceeded our full last year revenue only in 6 months. And what is really important, it also relates on our growth strategy, that we grew the revenue in the rest of Europe 1,264% in Q2. So rest of the Europe part of our revenue grew to 39% in the Q2. So this is really important, like we have communicated, and that's part of our growth strategy, that we grow in Europe, and that we have also done. Then a little bit our organization, our headcount, like I earlier mentioned, was 260 people end of the H1, and we almost doubled our headcount in the first 6 months comparing the last year. And we recruited more people in first 6 months than whole last year. So significant increase there. And when looking how this is split between different units, of course, the operations, which includes our kind of blue-collar employees, our logistics teams and purchasing teams, that is the biggest one. But actually, we have to grow all the units in order to grow also in the future. So all the units are really important for our growth. Then still about the order intake and order backlog. So like I said, almost 82 million order intake in first 6 months, which was more than double the last year order intake, and 55 million of that was booked in Q2. And like I said, also order backlog, we were really satisfied on that 62.4 million euros. And like we quite often said, our order backlog, that's only legally committed orders, and it's recognized as a revenue between 1 quarter to 3, depending on the customer. Then about our financial targets and short-term outlook, no changes in financial targets. We still target 200 million euros in revenue in between 2025 to 2027, and in the same time frame, also the profitability target still is this 10% operative EBIT, and then in the long term, at least 15%. And regarding the dividends, we are not planning to share dividend, but we are allocating all the capital on company's growth. And then about the short-term outlook, we slightly refined the short-term outlook. We had previously in our outlook that we saw the Q4 and Q1 revenue being impacted by the seasonality impact. But like you saw, our revenue in the rest of the Europe has grown to be quite significant share of our revenue, and that's why we don't see the seasonality impact having that big impact anymore on our revenue. And like we had also previously, we continue expanding our business in Europe, and like we communicated during the summertime, we will set up the operations in USA until end of the 2023. So 2 years earlier than we originally communicated. Yeah, I think that's it. And then I think time for the questions.
Again, spot on time. So thank you for keeping that. Okay, yes. The first question, it's a little bit about the competitive situation. Is it increasing out there? You know, everybody can see a great market there. And can you elaborate a little bit on how you differentiate from your customers? Is it a price game, or do you R&D give you a competitive edge in kind of your product, so it's just trying to be the best to produce this and sell it at the cheapest prices? I don't know whether you can elaborate a little bit on those subjects.
Sure. So at the moment, of course, this industry, there is a high demand. So there is quite a lot of room for the new players and competitors as well. So it doesn't have that big impact at the moment, but this is the growth time. Of course, in some point, then the competition start impacting more on the players in the market. And about how we differentiate, that was like I said, there is these three important factors in our products: this modularity, scalability, and dynamic charging, which our competitors doesn't have at the moment in the same way that we can provide the charging system to our customer, and it can include first, let's just few power modules and one satellite, and customer can then scale up inside the system the capacity according their customer demand. When in competitor situation, they always sell the one charger, and when customer need more power, they sell another charger. So that is the big difference in our system. And of course, this dynamic charging, like I described, that we can intelligently share the power inside the system to cars according to car requirements and needs. So that is, of course, really big differentiator as well.
And then a little bit on your scalability, because this must be a hyperscaling industry. Let's just say that the numbers tells you, but exactly in what years and when it will come, you can try and guess. So how have you created your business? Can you expand your production in the sites where you are? Are you somehow modularizing your factories or something like that? Just thinking, you know, I think we can all agree it's a hyperscaling. We can discuss about when the growth will hit, but it must be a little bit difficult for you to plan how aggressive should you be, you know, the next 5 years.
Of course, in this industry, when it's a kind of industrial production, it's always more difficult to scale up comparing the IT industry and the software business. But we have been really successful in that. It's a good example. We scale up last year our production to 3,000 square meters first, when you measure it square meter wise, and now we scale up this year already to 13,000 square meters. So we have been, our operations unit has been really successful and really quick in scaling up the business. So we have, I think, performed really well on that area.
And then there's a question about the lifetime of the chargers, and do you have a service business also included? I saw you had a software business and an update that, but do you also have a service business included, or are you too global to have that?
We have service business, and this is of course something we commercialize. There is lifetime of chargers. It can be 10 years plus minus, but of course our point is also, it's not only the lifetime, but like I said, the scalability inside the system, that when the customer demand is increasing, we can scale up inside the system. So this is also this kind of add-on sales potential also in the future.
And then there's a question: have you performed better than your IPO strategy? Do you feel you are ahead of those plans you laid out during the IPO, which is not that long ago?
I think that we are wrong person to answer on that. I think investors should answer on that. So I think we are happy how we have performed.
How do you expect to enter the US market? Some kind of a strategy, I guess the competition over there. And I also guess if I look at isn't there actually a consolidation of very large companies who are rolling out this nationwide, charging infrastructure? So is there somehow else you need to attack the US market?
Yeah, so of course that this is something we have project ongoing, and in some point we communicate more in details that which location we have selected. But like we have said, end of next year we have the production up and running in USA and whole setup basically, and that is our target. And this is something we work on daily basis to make it happen.
And I guess the Biden plan must have put some kind of a very decent hand under what will actually be asked for in the US market, and thereby also a more comfort by you.
Of course, it has an impact. And this is something in this industry, it's evolving so quickly, so you have to be also as a company really quick in your decision making and how you operate as well.
And I can see you have a pretty well diversified customer base. You're also going into industry. I guess that's what makes you a little bit different, because there is always some discussion on these large, at least in the US, there's a lot of discussion on those large want to roll it out. They are very, they need a lot of capital to roll that out. That business model is maybe not the best right now. Are you feeling anything that the customer is planning to roll out a lot, but they cannot get it really financed? It must be a large upfront investment and then turning in the revenue afterwards.
We haven't seen that much the issues with the financing, and regarding that, this is something also we work on, to have a diversified customer split, that we are not too dependent on one single customer. And this is also something, of course, when we have grown this year, we have also succeeded. So when looking last year numbers, we were, let's say, more dependent on the single customers than we actually are now. So this is what always helps when you're growing, and when you're growing in several countries at the same time also.
Thank you, Jukka. I think we went through the questions, and we're also running over time. So thank you very much, Jukka, for joining us and presenting your company and answer questions.
Sure. Thank you.
Thank you.
Pleasure.